Hello. Today is Wednesday, February the 9th, 2011. My name is Ron Morris.
And I am Delynn Guest, and this is Moving Forward TV. Welcome to our show. This is your local Tampa Bay real estate and mortgage update for today.
Lots of good stuff, but before we get started, Comic of the Week.
Here it is. Okay, due to some of the condition of some of the homes that are out there for sale right now, as you know, we've been getting a lot of questions lately about a repair program. There is a program out there, and it's called the FHA 203K. I'm sure you have heard of it. There's actually two programs that FHA offers. One of them is called the Streamline program, which goes up to $35,000. And the second program is their standard program, which goes, actually there is no limit.
There's no limit, other than the FHA county
maximum limits. Right.
And this is a great product. Hopefully a lot of people do know about it. I think there's a much bigger need for it right now with all the foreclosures and short sales, properties in need of repairs. And not only does FHA give you the loan to purchase the property, but they give you the money to repair the property at the same time. This is very much a niche product. Not all lenders offer this product, but those who do, it's a great product for the right set of circumstances.
Absolutely. Okay, this is a very detailed program with a lot of quirks to it. So we figured what we would do is we wanted to just run down and give you some of the highlights of the program. Starting with the minimum credit score in this program is a 640.
The debt to income ratio cannot exceed 45%.
The repair cost, as Ron said earlier, a minimum of $5,000.
And it's owner occupied only. No investors in this product, just owner occupied.
1 to 4 units only. Condos on a case-by-case, lender-by-lender basis.
Properties have to be at least a year old and have had an CO issued. So if you have a new property out there, the CO was never issued, that property is ineligible for this for that product.
And all work has to be performed by licensed and insured contractors. No, your Uncle Harry and or your friend, no sweat.
But I know how to do
allowed.
it. Can't do it. And that's really designed for the homeowner's protection as well.
Right.
And also any bank-owned properties, foreclosure, short sales, vacant properties have to go through the standard 203K, not the streamlined 203K. And that's really going to apply to a lot of the properties that we're seeing out there because they're bank short sales, foreclosures, that
vacant,
type of
distressed
properties.
So they'll have to go into the full program.
Correct. Okay, now let's look at some of the cost and the structure of the 203K loan. First of all, you have to have an FHA consultant that's going to guide you through the rehab and the draw process.
And these consultants charge anywhere from $400 to $1,000 depending upon the type of repair and the cost of the repair. If you're doing like a $5,000 repair, probably going to be around $400 or so for your consultant fee. Whereas if you're doing a $25,000 repair or more, you're going to be closer to the $1,000 mark.
It's going to cost more the more involved the loan is.
Right.
There will also be inspection fees involved in this as well.
And permit fees, remember, if you have to pull any permits for it.
If you have an architect or an engineer involved, of course, there are going to be fees associated with that as well.
And then remember, there's definitely additional lender fees and title fees. Not anything outrageous, but it does cost a little bit more because they are very paperwork-intensive loans.
Very much so. And last but not least, there's a contingency reserve. Whatever your amount of repairs are, add 10 to 15% of that. They're going to put it in the reserve account. Right. What did you call that?
Contingency reserve?
No, there was another term, the fallback, the oops money or something.
Oh yeah, the just in case money.
Just in case money, that's what I was looking for. So those are pretty much a recap of a lot of the fees and the structure of the 203K.
Finally, let's take a look at some of the repairs that are allowed under the program. Things like painting,
air conditioner,
electrical,
insulation,
flooring,
additions,
handicap accessibility,
roofs,
gutters, downspouts,
termite damage,
mold remediation,
well and septic,
detached garage,
windows,
doors,
exterior siding,
any appliances,
plumbing,
up to $1,500 on repairs for existing pools,
landscaping, and irrigation. Let's address some of the most common questions we get.
Yes.
One I've seen a lot is in reference to a swimming pool. Short answer, yes, it can be used to fix or repair an existing swimming pool up to $1,500. Never used to buy one, but it can be used, again, up to $1,500 for the repair of a swimming pool.
Chinese drywall, another very important thing. Yes, absolutely, that has to be actually because that's a health issue.
Fencing's another one. Again, short answer, yes, it can be used for the fencing.
Fixing an illegal addition, yes, that has to be done as well. So that can be used.
Another question we get quite often is, can the seller help pay for some of the repairs? The answer is no. However, the seller can pay up to 6% of the closing cost, like any other FHA loan. As far as helping with repairs, absolutely not.
No. And then the other thing is, how long does it take to close a 203K loan? Quite frankly, if all goes smoothly,
Which it never does.
are going to run somewhere between 45 to 60 days. A little bit longer than the normal, because obviously this, as we said, is definitely more paperwork intensive, more labor intensive.
How come we've never heard about this product a lot?
It's a great product.
I feel like there's two good reasons for that. Number one, this is a niche product. We're set up with a lot of different lenders. Not every lender does this loan.
No.
Matter of fact, only
Very
a
few
handful
do.
do the
Right.
loan. So it's very much a niche product. It's a timely product. It's a very labor-intensive product. There are a lot of loan officers out there that, even if they have the capability of doing it, want nothing to do with it.
Right.
It's again, labor-intensive and a slow product. I think the other reason is there's not been a great need for it until the last year or so, with all the foreclosures,
Right.
short sales, those type of properties that tend to have a need to be repaired more so than a traditional property. Therefore, this product is in need now. And you read some numbers that I thought was very interesting.
A couple of years ago, I think it was 2006, there was
Right.
only 2 of these type
in
of
the
loans
Tampa Bay
done in the
area.
Tampa Bay
2
area.
were done.
And last year, I think it was something like 135 were done. So it's definitely gaining in popularity,
Right,
the program, and it needs to. Let's face it, let's look at some of the properties that are out there. They're definitely in need of repair. So, and another thing that we probably ought to mention is the minimum loan size on this program. Although FHA might not have a minimum, most of the lenders do, and it's about $80,000
So kind of keep that in mind as well.
is about the bottom that they'll go.
Right. Last week we had a trivia question. We did have a winner on that. Matter of fact, that was Stephen Paul with Keller Williams in Tampa. Thank you very much.
Congratulations.
And the question was, what state in the country will not allow a reverse mortgage to be used as a purchase tool? And the answer to that was Texas. Thank you, Stephen. Appreciate that. That was the correct answer, so thank you.
Dunkin' Donuts gift card on its way to you.
Get in touch with us.
All right, with that, let's get on to our movie challenge. You know, the movie challenge was very hard this week. No one
Nobody got
it. We had
it.
some guesses, but nobody got it correct. And it was the Wild Wild West,
Will
Smith, who you probably can tell I just love him. He's a great actor. So that was our movie challenge. Here's this week's challenge. Okay, email us the answer to that movie challenge and you can win 2 free
tickets.
movie tickets on us.
And as a reminder, attorney Gary Lyons with one of our sponsors will be here next week. You don't want to miss that show. He's a real estate expert, going to be talking about short sales, foreclosures, anything connected to real estate. So don't miss the show next week.
Also, please visit our sponsors. They are who is responsible for keeping us going.
Blog us, email us, Twitter us, Facebook us, all that kind of stuff. Until then,
Thanks so much. We are
moving forward. See everybody next week.
Bye-bye.
What do you suppose they call that? A novelty act?
I don't know, but it wasn't too bad.
Well, that's a novelty.